Welcome, everyone. We're going to get started on today's webinar. I'm Allison LaForgia, the managing editor of the content studio at HousingWire. And today, our topic for this webinar is appraisal modernization enough? Today's webinar is brought to us by Accurate Group. Now, a couple housekeeping items before we get started. We will be having a Q&A session towards the end of the webinar. You can submit questions at any time for the panelists by using the Q&A icon at the bottom of your screen. HousingWire will be sending a recording out of today's webinar with the deck that's used to all registrants after the webinar. The recording will come in about a week. Now, for today's webinar, we are joined by expert panelists. We have Frank Guanera, the Director of Sales for Accurate Group. We have Ben Wyant, the VP and Product Owner of Appraisal Works, and Roger Jennings, the founder of Prosperity Appraisal Solutions. Now, Frank, do you want to share screen and get us started with today's content?
I will. Let me open up this. So, there's been a lot of discussion about appraisal modernization, right? A lot of buzz, a lot of questions about appraisal modernization. Specifically, is it going to solve the appraiser capacity issue? Is it going to shorten turn times, reduce costs? Is appraisal modernization going to provide a better consumer experience? They're all great questions, but there's more than just appraisal. We've got title, closing, recording, and one aspect that probably is often overlooked is technology. Before we jump in, I wanted to ask Roger and Ben, what are you guys hearing or seeing in the industry as it relates to appraisal modernization?
Yeah, and I'm happy to go first, Frank.
Sure.
Ultimately, it's new. So there's a lot of buzz behind it. Everybody likes something new, but everybody kind of cautiously tiptoes into something new as well. I think nobody wants to be left behind, and there's kind of the proverbial FOMO, if you will, which certainly holds true here. From a provider perspective, because we really work across both ends of the spectrum, from providers to lenders, that rush has really slowed down. Most providers got ready and able to accept orders for these services well ahead of time. They pounded the table and made sure they were ready to go. But on the lender front, I think it's been a cautious or slow rollout. I think folks are kind of still getting their ducks in a row with respect to adding these products into their lending policy, and certainly doesn't speed things up with loan volumes so low. But overall, I think the sentiment is everyone's interested in the benefits. They're excited to explore them, but there's still kind of a general skepticism around how will this impact cost and turn time, and maybe especially for lenders that have historically not leveraged bifurcated appraisal products, because it's a wholly new product offering in that sense.
Roger, anything different that you're seeing in the industry or hearing in the industry?
I would have to say overall, the biggest thing that I've really started to see holistically is a better use of the product, right? A better understanding as we go deeper, more vendors begin to use it. I think people are finally understanding more that the bifurcated appraisal doesn't fit into every scenario, right? So how it works for you specifically, where it works, and where it works best, even past that, is huge, right? So I think as we continue to evolve, I'd like to see that continue, but the companies I've noticed that have that success really focus around using this in the right scenario, in the right situations, and for their portfolio, right? What fits their portfolio, especially on the private money side, right? So one and the other are not always the same, one company to the next. It's obviously not as uniform as the GSE side. So understanding how it fits and where it fits best is improved.
Appreciate that insight, both of you. So what our goal today is to kind of share some trends on what we're seeing emerging in the industry, what our customers are doing to kind of solve some of the challenges they're faced with. And then, as Allison said at the beginning, we're going to open up the floor to any questions at the end and do our best to answer all those questions. So let's maybe level set, appraisal modernization. What is it? Well, first of all, the GSEs are changing the terminology from appraisal modernization to valuation modernization. And Fannie Mae did a really good job at defining valuation modernization in their selling guide announcement. Now, kind of quote it, but what Fannie Mae has defined this as: value modernization involves leveraging technologies, data, and analytics to enhance the management of collateral risk, making the process more efficient for lenders, borrowers, appraisers, and secondary market investors. So what all that means, and I'm sure everybody is familiar, if you're selling to Fannie or Freddie, you're kind of familiar with the appraisal waiver, right? During the pandemic, waivers shot up. God, I think we're hearing reports that 30+% of the files were getting what they called appraisal waivers. So that terminology is actually being changed and replaced with what is being called value acceptance. So the lender is going to load the file into LP or DU, and you'll get that initial response as to whether you get the waiver, or in this case, value acceptance. If not, this is where the process changes a little bit, because there's kind of that second bite at the apple, if you will, because DU or LP is going to identify whether or not the file is eligible for what they call property data collection or a property data report. And if that's the case, then the lender is able to order the property data collection from an approved provider. And on Fannie Mae's website, Freddie Mac's website, there are lists of providers. I think there's 19 approved providers. Those providers are then going to take that file, go out and collect the property data, right? Do that inspection that an appraiser would normally do, measure the home, go through the entire property, and answer a laundry list of questions, take what amounts to probably hundreds of photos, and deliver that back into LP and DU, at which point they're going to ingest that data, and you're at that point either going to get that waiver or value acceptance, or then it would move into what they call a hybrid appraisal. So that provider that collected all the data would then upgrade that to a hybrid appraisal, send that to a local appraiser. The appraiser would use that data and develop a 1004H, 70H file. So, level setting, what is appraisal modernization? There's been a couple of we've heard from lenders about, why volume is low. The capacity that appraisers have right now, because of the rates have significantly increased, the appraisers aren't as busy. So turn times have gotten much quicker. So the problem that we were trying to solve for doesn't currently exist, in that the appraisers have capacity, but like anything, this is cyclical. So this isn't going to last. It has impacted the runaway costs, where we've seen in some areas during the last couple of years, appraisers charging upwards of $1,000 for a 1004. The one thing that has caused some friction is the lack of a standardized data set between Fannie and Freddie. The good news is, I think it was last week or the week before, the GSEs have announced and released a standardized data set. So all of the approved providers are now working towards updating their data collection apps so that we have a standardized data set, and that'll be the next thing to roll out. So that's a little bit on valuation modernization. As I said earlier, there's more than just valuation, right? There's title, there's closing, and in the title space, we hear a lot about attorney opinion letters, right? And are they being used? Are they not being used? Remote online notarization. What I would say from Accurate's group, and we know from probably a lot of our competitors, we're kind of following the developments of these attorney opinion letters very closely. And Accurate is very well positioned to be able to offer these attorney opinion letters if there's a demand for the product. But there's also other ways to modernize title and digital signing that we're actively exploring. And we're uniquely positioned in this space because of our years of providing title data, both insured and uninsured, as well as RON and mobile notary in the home equity space. So just like valuation modernization has evolved from home equity, where in home equity, using a bifurcated or hybrid appraisal is kind of standard operating procedure for many home equity lenders. This is now moving towards mortgage. I think the same thing's going to happen in title. That's going to evolve, and we're watching that very, very closely. From a platform perspective, Ben, I wanted to ask you what you're hearing from your customers when they come to you guys at Appraisal Works about a platform and how it relates to collateral valuation, and historically, really, what are the, what's been so difficult when your customers are looking at maybe changing out a platform, and how do they mitigate that?
Yeah, it's a good question, and ultimately, the space is flooded with marketing, so it's really can be hard to tell what's real and what's not. And marketing claims, just by nature of what they are going to be broad and boisterous. People want you to read it. They want you to reach out after you read it. They want you to attend the webinar, and more than that, reach out after the webinar and learn more. But everybody knows that, and that's not groundbreaking, but it is part of what makes it difficult, because as a result, lenders are having to do more due diligence on a new partner before they can actually select someone. And if they kind of miss on that due diligence, that makes it harder for the next platform that they then select, because there's things that they're trying to watch out for. And it's really a big change. There's no way around it, especially if you're a large lender. But even if you're not, the platform that you choose is really a critical component of any lending process. It's almost as critical to your business as having email. I mean, I was speaking with a customer yesterday about their email platform, and they're migrating from one to another. And the second you find out that one email you sent wasn't received, or you're working out of two different systems trying to make a switch, you lose all trust and visibility, and it can be really disruptive. So it's a big ask to move your technology from one core system to another. But a lot of it ultimately boils down to, can the platform actually demonstrate real legitimate value and back up what they've demonstrated, and then maybe more importantly, guide you through a smooth, well thought out implementation process. And getting to the second point of your question, Frank, what's the solution? I often say it to our internal teams as well as our clients, but the people at the company, the people we have here, and the people that work on the implementation management team, they're actually one of our best features. I mean, we talk about features in a platform constantly, but they convert a sales promise to a reality, and they're ultimately a customer advocate. So, what do you do to make a platform switch a little less scary and a little less daunting? And how do you bear the burden of that due diligence that you need to do once you get past the marketing layer? I think the best thing you can do is ask for references. And we hear that all the time. Everybody asks for references, but this has happened to us, and I think it's really a great way to go about it. Don't just ask for a reference that's been handpicked because they're going to provide a great story. Ask for a client who no longer uses that software, and ask if you can reach out to them and understand why they left. Ask for a client who does use the software, and talk to them not just about what they love about it, but what isn't working great and what is that company doing to fix it. I think word of mouth is a big component here, and you're going to trust your your partners or your competitors maybe a little bit more as you talk from one lender to another than you would necessarily hearing it straight from the platform themselves. And once you get past all that and you select a platform, making sure it's successful, I think a lot goes into because a lot of folks reach out, they want to automate everything. That's what technology is here to do in many respects. But I think over automating things can sometimes lead to more issues than it solves. You really need to try and focus on reducing the number of exceptions in your workflow and your process, whatever it may be, appraisal, title, closing, and really focus on automating the things that you can automate, that 95%. Some platforms do some things better than others, and where one falters, the other does best, and vice versa. But ultimately, you have to go into that conversation really focusing on the things that are, going to make an impact on your business, and then going beyond that, not just looking at the technology, but looking at the people behind it. There are going to be things that, as you're implementing new software, that you completely forgot about, and you're going to get near the finish line of getting ready to go live, and you realize, shoot, I completely forgot about this. We can't go live without it. How are the people that you picked to work with going to respond to that? Are they going to be able to pivot quickly and support you and make sure that you're set up for success? I think that's a lot of the stuff that we're hearing, Frank. It's the stuff we go through as we try to talk through a platform shift with folks that are hesitant to put in such a time and monetary investment into doing something like that. But I think those are all things that need to be thought through up front about your platform, and really look for a consultant and not just a software with a checklist of features that it may meet in the first meeting.
Before I pull Roger forward, I have two quick questions for you, Ben. So, platform related to appraisal modernization, right? How does, what should a lender, credit union, non-bank lender look for as it relates to appraisal modernization with a platform?
Yeah, when it relates to appraisal modernization, I think, it's ultimately got to be quick to implement, but we talk about this all the time as well from a software perspective. It's got to be intuitive. So like we see a lot of lenders come to AppraisalWorks, for example, because they want to aggregate everything they're doing into one unified system. The benefit in that is you're taking all these different providers that have different way of communicating with your customer, different product names, different workflows, and you're putting it into one system. So your team only has to learn one thing. They're all speaking the same language. But as we talk to lenders about appraisal modernization and implementing it, one of the first hurdles that everybody gets through is, which product do I order? And when I do order it, what do I need to include with the order? The DU case file ID or the LPA key? And what am I expecting to get back? So I think when you look at a platform specifically for appraisal modernization, it's got to be really intuitive, simple to use. Again, the people around it matter as well from a training perspective. But I think that's really more important. And the way that a platform can support appraisal modernization really speaks to the way that they can support anything new, because your technology isn't just about supporting this one new thing. There's going to be other new things to come. I mean, there's going to be a lot of innovation in this space. So your platform needs to be able to support a lot of new things quickly and pivot with you and make it easy for you to use.
And then as far as ordering the service, right, the data collection, I would suspect part of that comes or needs to have those approved vendors or some of those vendors already on the platform, correct?
Right. Yeah. I mean, like the the value of an aggregated system is directly in line with the number of aggregated services that you have in it. So, I mean, if I'm an aggregated platform and I aggregate all the vendors that do appraisal modernization, that's it. That's everything. That's all you need. You can pivot from one vendor to the next. You can order from anybody you need to work with. But if you're trying to be an aggregated collateral management platform and you've got one or two providers that support appraisal modernization out of the 19, you're not really getting what you're trying to pay for and implement within your company.
All right, that makes sense. So Roger, I know you and I've got a history together, and I know you've implemented probably more platforms than you care to admit. But from evaluating platforms as it relates to appraisal modernization and anything else, what have you learned through doing this that probably can help the group, especially if they're looking at maybe upgrading a platform?
Yeah. So first, Ben hit it dead on the nose, right? It is a task. Once you're connected to a platform and decide to make that transition to a new platform that works better for you, it can be a beast of a project, right? So I would say for those looking at first time platforms, I know not as many on this call, but the diligence is key, right? To Ben's point, the features and all are great, but in my experience overall, the customer experience, the service that you get from the platforms makes all the difference in the world. It truly, truly does. There's so much change in the industry. And then from a competitive standpoint, as a lender, right, you have so many areas that move and need to be adjusted, and sometimes adjusted quickly, right? And it makes the difference on whether you stay competitive or not. But the platform is absolutely critical, and picking the right one, it's tough, but spend the time to do it. I would say lose the time there, because what you lose by picking the wrong one is going to far exceed.
And then, Ben, are you seeing, what are you guys seeing as far as like title and closing in a platform?
Yeah, I mean, title, closing, appraisal, flood, all these things are really part of the whole package that you have to piece together. And I think one of the challenges that a lot of lenders face is they're forced to implement all these different point solutions to accomplish the end goal that they want to achieve. And when you implement all those different point solutions, it makes it tremendously hard for you to kind of keep one streamlined, unified process that everybody across the operation understands how to work within. It makes it hard for your consumers to understand where their loan's at in the process. And by way of that, it's hard to connect all those different point solutions to what ultimately keeps your stakeholders up to speed on the transaction. So your loan origination system, your point of sale system. I mean, if you want to integrate, across your whole collateral management cascade, all of your different platforms into your central hub for the borrower to see what's going on, or for your loan team to see what's going on, you're talking about a lot of projects and working with a lot of different groups and a lot of different, investment that is going to need to be done. So there is a tremendous amount of interest in having all those services aggregated, into one centralized platform. And then beyond that, when you go to actually use business intelligence tools and reporting and things like that to see if the changes you're making, like appraisal modernization, are actually helping the bottom line, or improving your process, trying to do that with point solutions is borderline impossible, because you're going to end up building reports yourself after you pull data out of all these different systems. It's not going to be real time. There's a lot of benefits of putting everything in one spot. And we hear that from lenders consistently. It's why we've made concerted efforts to add additional services beyond appraisal into Appraisal Works. And I think it's something that's really going to be important as we talk about modernizing everything. Is appraisal modernization enough? I think, we're asking that question. We know the answer. It's a tremendous start. Is it enough for what? enough to really make that the mortgage process seamless, smooth for everybody, all the stakeholders? I think the answer is no. I mean, ultimately, you've got to focus on every aspect of the mortgage process, and doing that through technology, I think, is what a lot of folks are focused on.
That actually brings up a point. I've talked to a number of different lenders, probably over the last 12 months, about appraisal modernization, valuation modernization. And, there's kind of two camps, right? There's the group that was, as soon as it was policy, they jumped all over it and implemented valuation modernization into their work streams. And then there's the other camp that was kind of, well, let's take a wait and see approach, and looking at really turn times on the surface and saying, well, appraisal turn times are, have gotten so much better. I'm just going to wait on appraisal modernization. And what we would consult with our lenders, and what we would suggest is, whenever you're going to go to a new appraisal product or process, it is so much better to try and implement that when volumes are low. And right now is probably the best time to do that, so that you can work through and develop the appropriate workflow. You can kind of bake that into the process so that you know what to do, how to order a valuation acceptance, property data collection report. What do you do when you get it back? What happens? What's the loan process? And you bake that in while volumes are low, because, again, as I said, rates are not going to stay here forever. There is going to be, hopefully sooner than later, a reduction in rates. And that might be 12 months from now. Who knows? It might be sooner. But what I always bring up to our customers when we talk to them is, you don't want to wait for that to happen, because even a half a point reduction in rate could result in a huge increase in loan applications. And that, of course, is then going to have a ripple effect. We're going to get back to appraiser capacity issues, appraiser fees escalating to a point where appraisers are, again, potentially charging, large amounts of money for appraisals. And now you're going to try and bake in a process for valuation acceptance. I caution against doing something like that, because it's like changing the tire driving down the freeway, right? Volumes blow up like that, it's going to be impossible to try and implement that. You might be able to do it, but it's not going to be easy. So as we look at and talk to our customers, we're letting them know, here's what we recommend. As with any lender, sometimes a contracting process, just to add that particular product into your agreements and SOWs, that could take time. Get that process moving now. Get those products into your agreements. Get the product available to order, and start working and getting a few of those orders through the process, and work out how that workflow goes. Bake that into your process, and you'll be ready for the next time we get a rate decrease and we get hit with a refinance boom, which, again, this is cyclical. We've been through these ups and downs. Unfortunately, this is a little bit more of a down than I think we'd all like, but it is what it is, and we're going to have to deal with it. Ben, when we look at collateral valuation platforms, in terms of benefit to the business or improving the customer experience, what should a good collateral management platform need to do in order for it to provide benefit to the the user, the lender, and also improve the customer experience. I mean, what if a lender is looking at a system, what should they include in that analysis to make sure that if they implement, it's going to improve the consumer experience and it's going to benefit the business?
Yeah. I really think there's a lot that you can tell from a demo. You can understand kind of the surface level. How's the system operate? Is it easy to use? Does it check all my boxes? Can it do everything I need? And I've said it before, but I think a lot of these platforms, ours included, at their core, we ultimately aim at the same objective. We differentiate ourselves in different key areas, but selecting a platform really has to be more than just checking the box on that feature list. They have to show you real cost savings and real time savings. And it needs to be beyond the marketing and the demo. Anybody could be the loudest one in the room, touting unheard of cost and turn time reductions if you use this feature, if you use this platform. And that's, outside of even the collateral valuation management platform space, it's software in general. And I could make claims like that about our platform right now, but for it to matter in the end, it actually has to happen. Like when you actually start using the software, you have to see those changes in action and affecting your business beneficially. So finding out what you're buying and implementing is actually going to make a difference when it comes down to everything I've said earlier. The platform has to do more than what you can see in a demo or what you think it can do. It needs to follow through on that demo. And, like I mentioned earlier, it really boils down to the people behind the platform a lot of the times. Throughout the implementation and the onboarding process, you got to look at how these platforms are designed and the features that you're looking for. And, if you change your approach from X to Y, how quickly can they support that? What's it going to cost you to do that, to make that important business change? What's the risk that you're taking on? And do you trust the people telling you that this feature is going to dramatically change your appraisal process or your collateral process if you can implement it? And when they say we're going to implement it in 3 weeks and you'll be up and running and your lives will be changed forever and everything will be great, you got to look below the features. You got to understand how they're designed, how they can change, how the people behind the platform are going to help you. You're really looking for improved customer experience, like we've talked about, and the analysis behind that is going to be the proofs in the pudding. But business intelligence tools that do more than just report on the past. Everybody kind of needs to move beyond that. We can't just look at the past performance. We have to be able to use some of the new technical innovations that allow you to forecast and predict the future using your own data, because you have all this data to affect your decision making. We need to let lenders use that to make great decisions. Intelligent automation is a big one that comes up quite a bit to get you closer to that 95% that I talked about. Doing these things without development, low code, no code environments. Those are not just buzzwords anymore. They're kind of the standard acceptable criteria for a platform from our perspective. And then back to the people, look at their track record throughout the industry. Are they forward thinkers who are investing in the platform to bring you tools that are, going to actually benefit your business in the long run? Are they thinking about AI? Are they thinking about title and closing? Are they integrating with technical solutions that are going to benefit your business? New platforms pop up all the time that focus on different aspects of the collateral management process. If you're not building new integrations with new platforms, you're not necessarily evolving and giving your customers all the tools in the tool belt that they may need to make good decisions and implement new things. And maybe most importantly, and I think Roger would agree with this, look for people who listen to you and are honest with you and deliver what they commit to you. Because the software implementation process, and especially at an enterprise level like we're talking about right now, it's a big commitment. You're getting married in some respects. So get to know the people behind the platform and make sure that you're making the right decision by evaluating more than just the marketing slick that they sent you and actually seeing it in action and in use.
Yeah, absolutely. And I would really just add to that, there's so many gray areas and variables associated to appraisal, as we know specifically. And it's so funny that data is going to be no different, right? So being able to measure that and understand it is critical. An appraiser's performance is no different than an appraisal review. It has those variables and hold times and delays by borrowers, and ensure you get that accurate measure. To Ben's point, take the time and make sure that the people that you're working with on the back end understand your needs, and really on that demo phase, ensure that you have the people in the room that you need and really understand what your goal is, and that you're working with a team that's willing to support or build whatever it is to your need, right? There's a million variables in appraisal, and unfortunately that carries through to every piece of it, platform to closing, right? The appraisal variables are always the toughest part and most aggravating if you handle them incorrectly.
So, Roger, I don't mean to put you on the spot, but like I said, I've known you've implemented a few platforms. Are there any landmines that you can share with the group in terms of like what to avoid or what to look out for when it comes to maybe it's implementation, maybe it's designing a workflow, selecting a platform, anything in that respect, or when looking at a platform to handle not only appraisal but appraisal modernization. Like I said, I don't mean to put you on the spot there, but
No, absolutely. Well, and those on this call and those that know me, right, and know that I am not above falling for a sales pitch. I've fallen for quite a few in my time, unfortunately, and I may even use the word hard-headed. I know that's hard to believe for those of you that do know me, but I've had to learn the hard way, unfortunately. But Ben hit it so on the nose, right? The customer experience is everything, right? The customer service from your platform is going to be a direct reflection of what your customer is going to go through, right? And I've had platforms that started at phenomenal, right? And then were overloaded and overwhelmed, like all of us become at times, with volume. And unfortunately, I was sidelined because a bigger, larger competitor came along. And it's tough on both sides to balance that. But the truth is, the best platforms that I've worked with have truly been the ones that understood that for us to become that bigger, larger competitor that our previous platform shadowed us with, we needed that support, right? And they found a way, even if that was us on, I've Ben and I have literally been on the phone. Frank and I have literally been on the phone at 10 o'clock at night, problem solving. And there's pieces like that are invaluable. I mean, you just can't put a price tag on something like that. And it makes all the difference in the world when it comes to whether you're going to succeed or not on the platform you're on. So I would say the hands down, the biggest landmine I've run into was using a good platform, and then that platform kind of exploding, right? Taking on a couple of very large clients, and to their defense, right, they have to put their focus there and end up without the resources. And unfortunately, as a smaller guy or company coming up in the industry, we were sidelined, for lack of a better word, and that impact rolls direct into your customer and very, very quickly. And it's a very, very real challenge that you have to overcome.
appreciate that. The other thing maybe I share before we take some questions, and I don't know, maybe there's a question already in the chat about this, but I also often get questions from lenders about appraisal modernization, valuation modernization, about what can we expect in terms of turn times, what can we expect as it relates to cost, right? And I think the best, I could put some broad strokes around it, right? From an expectation perspective, as it relates to turn times, the long pole in the tent is always going to be the availability of the property contact, letting that what we call data collector into the property, right? But let's just assume there's, we're not working around vacations, we're not working around whatever holidays, that sort of thing. Generally, what we're seeing with respect to turn times is they can be anywhere from, as quick as 48 hours upwards of maybe 5 days, right? The more rural the location is, obviously those tend to take a little bit longer. From a price perspective, you could probably expect, half the cost of a traditional appraisal. And when I say half the cost, I'll use, a benchmark 1004 at, let's say, $500, right? $450. That's about what we've seen in that respect. So wanted to leave the group with that. Ben, I don't know if there's any questions in the chat that we wanted to address. I know we've got maybe 5 or 10 minutes left here, so certainly want to make sure if there's questions we address any of those.
Sure. Yeah. I see a couple in here, but certainly welcome folks to add more. One we've got, Frank, here is, have the GSEs said anything about a standard data set for appraisal modernization?
Yes. In fact, they both made an announcement, like I said, let's say maybe 2 weeks ago, that they have gotten together and they have already developed that standard data set. I can tell you from the AccuRecorder's perspective, we've already received that data set, and we're working to update the app to now function off of that standardized data set. So the process behind that is all the providers will get the data set. We're all going to be given a period of time to do the development, test it. The GSEs will then want to do their own testing on and approvals on our apps to make sure that they function properly. And then once all that takes place, then they will roll out, and when I say they, Fannie and Freddie will roll out the new standardized data set. I don't have a timeline as to when that's going to happen. If I were to guess, I would suspect, knowing Fannie and Freddie, probably not going to see that until maybe Q4, Q1 of 2024. So Q4 this year, maybe into Q1 of next year. Don't quote me on that. It's just my personal read on how things have gone. But that standardized data set, once that goes in, the importance of that standardized data set is oftentimes lenders don't know at the beginning stage of the application where they're going to sell that loan. So are they going to sell it to Fannie or Freddie? Right now, with each Fannie having a slightly different data set than Freddie, that's an important component, right? You need to know where you're going with that because the data set's different. We've been able to solve for that in that we collect a universal data set right now, and we can shift gears, but that's a little bit of a challenge for some lenders, right? So that uniform data set is going to be key, because then it won't matter at the beginning. Wherever you're going to go, it doesn't matter. That data set will be accepted by Fannie and Freddie.
Thanks, Frank. That helps. We got another question here that just came in around the training that property inspectors have or receive, and whether or not they're appraisers. Do they measure by ANSI standards? And there's certainly a lot of talk on turn time and cost, but how is quality measured with respect to the inspections?
That's a really, really good
Two questions in
question.
one.
Yeah, that's a great question. So the GSEs have published for all of the approved providers a training guide. So every provider is going to put their data collectors through an approved training guide. The important part with that is the GSEs are requiring annual background checks for the data collectors. So kind of different than the appraisal or the appraisers, where I know I can just speak for Accurate. We require a background check for the appraisers to come on our panel, and the states require a background check for the appraiser to get their license. But the appraiser is not going through an annual background check with the state every year. That's different. The Fannie and Freddie are requiring that the data collectors get an annual background check. So that's really important. The other, and this is all available on the website, Fannie and Freddie's website. Then I'm trying to remember the second part of that question. So the training.
Measurement by ANSI standards as well as the quality of the inspection.
Right. So a lot of the apps are using tools built within the app that will take 3D renderings or be able to do the exact layouts of the property. If I recall correctly, and don't quote me on this, but I think they may have moved away from that official ANSI standard, but don't quote me on that. I don't recall off the top of my head. And then as far as quality goes, that is probably the most important aspect of the data collection. And that's something that you should make sure you're talking with your providers about. What are they doing? How are they going through the quality, the QC check? So again, I can speak from our process. We have 100% QC, and that QC is going to look at a number of different things in terms of photo quality. Our app is built so that it's kind of dummy proof, if you will, pardon the expression. But if the data collector answers a specific question as they're going through the app, let's say something about damage, that then opens up another drop down and then requires photographs. And based on the answer, that may drop down another question that they have to answer. So we are checking to make sure that everything lines up, right? That the data collector cannot submit back to us a data set without having completed every single question and loading up every single photo that the app is requiring. And then we do 100% quality control, because if that file needs to be upgraded to the next step, which would be a hybrid appraisal, you have to give the appraiser good quality data, good photos, extensive data, a floor plan for them to work off of. And if your provider isn't doing that, it's going to be very difficult to get appraiser adoption. So that's a really, really important piece of the process, is the QC. During our pilot sessions, the GSEs were really involved in looking at the quality of data that we were collecting and providing back.
And Frank, one other aspect of this question, the property data collectors can also be appraisers, right?
They can. We typically are going to use a real estate professional. And what I mean by that, typically it's going to be a realtor. it could be an appraiser. We have a number of appraisers on our panel that really just want to do that aspect of things. It may be somebody like an insurance adjuster, but typically like a licensed professional. Again, realtors, brokers, appraisers, and then they're going to go through the background check, the training on how to measure a property correctly. We give them sample files that they have to work and provide to us so that we can train them. But it can be an appraiser. It doesn't have to be an appraiser.
Thanks, Frank.
Yep.
One other one we got in here is with respect to how important customization can be considered within with respect to technology and a collateral management platform in general. And I could take that one. I think ultimately, and Roger kind of hit the nail on the head when he talked about this earlier, but customization's important first and foremost because nobody does everything the same way. It can be difficult to pigeonhole folks into one workflow, and collecting consumer credit card payments one way at one point in the process, that's never going to happen. So you have to be able to configure and customize a platform to work across a broad spectrum of workflows. But to Roger's point, if you're a small lender and you maybe don't have massive volume, and they're a platform you signed up with and they just got multiple other big clients that they're focused on, the customization has to be simple. It has to be something you can either do yourself, or it has to be something that doesn't require development, because then it doesn't matter how many customers that platform has. It's something easy that they can do to delight their current customer regardless of their size. So I think customization is mandatory. That much is true, but the way that things are customized and configured has to be low code, no code, easy to implement, easy to change. So hopefully that answers that question.
I'm gonna just ask you a dumb question, because I've learned it myself over time, but could explain the no code, low code thing for us that are not that technically savvy?
Yeah, so when you think about development and new features and rolling things out to customers, that's coding. That's where code comes in. So you want to avoid that, because when you go down the development path, you hit a lot of red tape, you hit a lot of bureaucracy, and you hit a lot of things that will require a number of different people to get approval to invest time and money and resources into developing something for someone. When you develop it, you then have to test it. You then have to schedule a deployment. You have to release that code. Everybody's got to make sure that code's working the way it was supposed to work. So when you think about that, a lot of money, a lot of time, a lot of complexity just to get one thing about your process changed. Designing features from our perspective can't be done that way. They have to be drag and drop, simple reconfigurations of workflow in a no code environment. And no code would mean you avoid everything else that I just mentioned. It's something that someone like me or you could do, Frank. We could go in and we could say, I don't want my credit card payment processed at the front of the transaction. I want it done at the end or halfway through. I don't want to have to put in a development ticket just to get that changed for my account. I want to be able to just go in and make a change myself. And it's the same with BI reporting and things like that. You don't want to have to request a report to be able to see information about your data. You want to just be able to build the report yourself. At the end of the day, if you have to request a report and someone tells you, all right, we'll have it ready for you in a couple months, one, it's useless probably by then. And two, you're probably just going to go build it yourself. So you need software that's going to allow you to build it using the data that you've collected in that system. That's another great low code, no code example.
Appreciate you.
Yeah, for sure. And I can tell you over time, I mean, it's been proven time and time again, right? This simple works, right? The simplicity works in terms of certain areas, right? To Ben's point, there's always some customization and difference per lender, but at the end of the day, data is data, and just having that a solid foundation of data, and working off of that alone will do wonders for your business. I've had, appraisal shops where I've literally hired one person to do the ordering just based on the numbers, right? Get the number accurate in terms of how long it took the appraiser to get the reports done, minus hold times and delays. And that's a simple report to put together. And the impact of that is so dramatic and puts you in a whole nother ballpark of competitiveness. Simple works at times, right? And really, really is the best approach.
Well, thanks, guys. Allison, I know we're up at the top of the hour here. Anything that you wanted to say before we log off?
No, I just wanted to give you guys the opportunity for last thoughts, but I think Roger wrapped things up pretty nicely. But Ben, Frank, anything you want to wrap up with before I close us out?
I really appreciate everybody's time today. If there are follow-up questions, please let us know and I'd be happy to answer them.
Yeah, agreed. Thanks, everyone.
All
Thanks,
right.
guys.
Fortunately, we've come to the end of today's webinar. Frank, Ben, Roger, thank you so much for sharing your insight with us, and attendees, thank you for joining us today. You submitted a question that we didn't have time to get to. We will follow up with you after the conclusion of today's webinar. Now, today's webinar was recorded, and we do have a copy of the deck. You will all receive that. All registrants will also get a link to the video once it's live on our site at housingwire.com/events. Thank you for joining us for today's webinar. We look forward to seeing you all again.
Thank you.
Thanks.
Thanks.